Everyone, can you hear me and see my screen? Awesome. All right, if you are new here, if you signed up online through YouTube because of the video yesterday, in your control panel, there is a questions box. You can ask questions in there and I will answer them. Right now, we are starting the live call that I do every day in my room for the paid members. In this call, we go over all of the charts, the internals, questions. They usually last about 45 minutes to an hour, just kind of depending on the subjects and what people have questions about. Um, so let's get started. So for today in our room, we had 2 day trades. They are both winners. So we did well on this move down. We are positioned well for this move down. And essentially, we're just kind of in a wait and see mode on support. Internals are pretty ugly. We'll look at those in a minute. But they broke down on the ES through last week's low. They spiked it and held. And so far they've bounced and kind of traded sideways and consolidated down here. So the key levels we're looking at, they came up 52.22. We really wanted to hold under that. They kind of spiked barely through it. The high was actually 25, I think, 26. So they spiked through it. That generally tells us it's not a wave 4. However, when you do get a monster move down like you did with CPI, a bigger wave 4 is not that uncommon. So spiking it by a few points is not ideal, certainly, but also is not invalidating or makes the count not, able to play out in the correct way. So we would call this a wave 4, and then we'd be starting wave 5, potentially of 3 down. It just kind of depends. I think this will be wave 5 overall down, though. Potentially starting wave 5 here, where we'd come down into this 5150 area. I think that's probably the most likely spot to hold this C wave. And it can hold for the C wave in a bullish or bearish count, but we're starting to get into a more bearish setup if that happens. One thing that would happen if we go to the daily chart real quick here, we put on our SMAs, you can see that we're coming right into the 50 moving average. That's the purple line right here. It's at 5170. So 5170 to 5150 would be an area I would watch for them to hold should they break down and make a new low below today's low. This 50 moving average will be good support and they will likely bounce it the first time they come into it. So that 5170 area is a place to watch if they are able to break down. Back to the hourly. For the bulls, if we break down into this area, the bulls will be looking to build a wave 5 up. It'll just be a deeper wave 4. So we had wave 4 over here with our potential breakout setup that failed. And this deeper wave 4 comes down. It's still above our blue support box that we've been talking about. But the problem the bulls have with coming down here is the NASDAQ. And if you'll remember when we were on our way down in October of last year, I said that the NASDAQ was the problem. Watch the NASDAQ. It is not breaking down like the ES. It is not indicating a full-on breakdown. If you're bearish, the NASDAQ is a problem right now. If you're bullish, the NASDAQ is a problem. Not fully yet. We'll see on the NASDAQ that they haven't fully broken their blue box yet, but the NASDAQ is a problem if we continue lower here. So the bulls are looking to make a deeper wave 4. And then we'd look for an ABC up, where A would likely come back up into this resistance area. And then you'd get a B and a C up into that 5360 to 5400 area if the bulls are going to play out. Now, until we break this blue box, we give the bulls the benefit of the doubt, and we are still bullish. Once we break that blue box, then we have to start looking at more bearish paths and a more bearish outlook on the market. So if the bulls or the bears are able to bring this down and break through, we would be looking more bearish outcomes. Okay. Matt has a question. We made a lot on the first trade today and the market stopped going up. You gave a short alert and I was worried, but as soon as we entered, the market reversed and went down. How did you know? I have an algorithm indicator that tells me likely tops and bottoms or likely areas of waning momentum, I should say, or maybe, let's see, how do you want to say it? momentum. It's a momentum indicator that's combined in the algo with a lot of other factors, where we're looking for momentum to be stopping or slowing down. So the market should be at least bouncing. We're not necessarily looking for a home run, big time move up, but we are looking for a bounce to get our first profit and then see if we can follow through. This is going to be really annoying here because if you're not in our room, we shorted this, took a half profit here and set our stops. They poked us out right here, and now they're accelerating to the downside. So it's a little bit annoying there, but looks like they're going to make a run at the lows here, and we'll see if they can break it down. This is also supported by internals. So Matt, to answer your question a little more, when you're looking at a bounce, so you got this move down, right? Big, strong move down in the pre-market. They start to bounce it into the market. We've seen the bulls do this a million times where they just do this. However, I'll bring them over so we can see them. If you look at the internals, you have consistent selling on the Vold all day, straight down selling, very strong selling at that. They're already in the 200 million zone. You had the tick has not been over the zero line basically all day. And you also have the ADD that's been pinned under 2000, which is a hugely bearish number. 1500 and under is what you're looking for. It's under 2000. So when you look at those things all together and you see that the market is bouncing, but these things are not bouncing, the ADD is not really moving up to a level that matters. It got up to barely under 2000 and then collapsed back down. The tick never really got much over the zero line and sustained, and the Vold was selling the whole time. When you see that happening and you see these readings up here, negative 13 to 1, 26 to 1, 3 to 1, 11 to 1, 8 to 1, those are all extremely bearish numbers, which tells you that the bulls are likely to fail on any rally. So you should be shorting the rallies at resistance. Thank you for your guidance and insights. I've mentioned this before. I got to stretch this out. This is a big one. Hold on. Won't make it bigger. Interesting. I've mentioned this before, but it's worth joining this group. Sorry, guys, this is a really hard one to read because it's a long one and I only get a little window for some reason. I don't know why it won't make it bigger. But it's really worth joining this group. Has significantly improved my trading profitability. I've been consistently gaining 7 to 12% every month. But more importantly, I've developed patience and discipline as a trader joining, and I've been following you since the Slack days. Oh man, you're here forever, 3 years, and have never regretted joining the group. Thank you for sincerely for helping. I appreciate that. Thank you. I've been doing this a while online officially for 3 years, and I've been doing it a while, before that. I've been trading for over 20 years and doing this for the last 3. And really the reason I did it, I always love the question, why, if you're making money, do you need to collect people's money? Why don't you just trade yourself? I do, but there's a lot of reasons I did this. Number one, trading is a lonely game. You kind of just sit here by yourself doing nothing, so it's nice to have a community around you. Number two, I like to help people. I was a Pee Wee football coach, a high school football coach, did a lot of different things. I was a trainer when I was in the corporate world, and I've always liked to teach and help. I think it's fun. Number three, capitalism is a wonderful thing, and multiple streams of income are smart. And if you don't believe that, then you're silly. Number four, I see what's going to happen in the future. And I don't mean that like I am a fortune teller. What I believe to happen is going to happen in the market is going to be ugly. And I want to help as many people as I can protect their money, because I think it's important for people to understand the market in a way that I always say makes sense. So there's a lot of reasons I do this, and those are just some of them. As we continue down, it looks like we're going to challenge these lows. If they break through, this would be considered right now at least 5 of one of these C waves, whether it's the bearish or bullish C wave. If it is going to continue, remember wave 5 should not go beyond the 764 of 1 through 4. So if we count this as 1 through 4 on the way down, 51.43 would be about the lowest it can go past that, and I would count this more as a bigger B wave bounce and starting a bigger C wave down, where the count would be A, B, and then starting a bigger C wave down. And that very well could happen, especially in a diagonal setup where you see a lot of selling and a lot of melting down. So we'll watch 51.43, but I do believe around that 51.70 to 60 level, you should see a bounce based on the 50 moving average if they just blow through that. That's also the 0.5, which is a perfect target for a wave 5. So if they get through these 51.70 to 51.59 areas, then we could be in for some selling. What levels do you expect after C is completed? Are you talking about these two C's down here, I assume? So if we're bullish, I would expect them to retrace to at least the 5270 area, more likely the 5300 area, and then A wave. So it'd be, it wouldn't just be a shot like this. You're going to get an A wave, so it's going to be like this. I would expect those levels before we see a pullback, and then up again in C to the all-time highs if it's going to be bullish. If it's going to be bearish, I would expect them to hold the 618, 2764 off the top, which would be maybe even less than that. So if they come down to the area we're expecting, I would expect them to hold 5293 at the highest, and that's based on coming down to about 5160 or so. Above that becomes bullish in a hurry. Remember, guys, we do have a daily squeeze still building on the NASDAQ and downside energy building. So if that squeeze fires to the downside, you can see a meltdown in a hurry. That daily squeeze is like, let's go back over to the charts real quick. Let me bring those back over for you. So down here on the NASDAQ, if we go to the daily, let me maximize this real quick. So on the daily, you have 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 days of squeezing going on. So since 327, the daily has been squeezing, and you have pretty big downside pressure. You can see the red bar is downside pressure. You have downside pressure building, and if this squeeze fires to the downside as the downside pressure builds, you're very likely to see 200, 300, 400 points in a hurry on the NASDAQ to the downside, maybe more. It's building a pretty decent sized squeeze. And then if you go over to the ES, you also have a squeeze building. It's only 2 days old, so it just started, but the momentum indicator is going negative with downside pressure. So it's looking to try to fire to the downside as well, assuming they continue to follow through here. Now, I talk about in my room, if you're not in this room all the time and you're just here for the call, I talk about they can bring this back down to basically zero, which they've done, and then get bullish again. That does happen. But if they start to turn it red like it is on the NASDAQ, and since the NASDAQ is leading red, I would imagine the ES will do so as well. They can fire this squeeze to the downside and make this a pretty quick meltdown on the market, which we would expect. I've been talking about this for a while, that when we see the markets break down, we should see pretty strong selling. And I've talked about this the last few days in my room, that from here to here is pretty straight down selling. You had a pretty good support area right here to break. They didn't. Came back up, straight down selling, back up, straight down selling. Eventually, you're going to get to a point where this shoulder breaks or this half breaks, and the straight down selling doesn't stop and get a bounce. That can be evident if we zoom out to the, let's go to the daily, and I'll show you an example of what I'm talking about. So you had straight down selling and a bounce, straight down selling and a bounce, and then the selling didn't stop for a while. So this was back in January of 22. after the all-time highs. You came down, you had straight down selling as a setup, a bounce, straight down selling as a setup, a bounce, and then straight down selling. And to review another thing, since we're here right now, topping, right? Topping takes a long time. When people were like, oh, you've been calling for a top for a while, that is true. I have, because we're close to that top. But in September of 21, okay, you had a significant pullback that could have signified a top, but they held. So you're starting your topping process here at the 1st of September. You get your first significant pullback to indicate a wave 4. And if they fail here, a top. Now they didn't fail and they went higher. You got a significant pullback here that could indicate the top. And if they fail here, we got a top, but they bounced, right? Made a new high. You got straight down selling that could signify a top. And you didn't. You got one more rally higher. And everybody's like, oh, you're saying one more rally. Yes, because these 4 and 5s can be very difficult, especially in a diagonal like this ending part here played out as. And you can see that right over here with the selling straight down. So topping takes a while. It's not an overnight process. It's not something that happens, the actual top. Sure, it happens on whatever day it topped. This is the actual top here, but the process of topping starts here, and you can tell, and the reason is psychology, right? You have strong bull move up. Everybody's bullish here. Bullish, 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 bullish. Okay, well, this is kind of different. So now you're starting to get some weakness in the bulls. But the bulls aren't dead, so they have another push left. They can come back, take out the highs. Everybody's like, oh, we're super bullish again, super bullish again. Then you get weakness, and everybody starts to think, okay, this is different. If you look all the way back off the screen, this is all the way up, straight up, and now all of a sudden you're starting to get deeper pullbacks. You get one more push up. It's less of a push, right? This push was pretty significant. This push is less. You get a significant pullback, weaker. You get another push up. It's less of a push. You get a significant pullback. The top is in. Adios, right? And then they go. So psychology and weakness is what you need to see at tops, and it can take a while. This took 4 months to top, and this is a bigger top that we're at, so it could take longer. I think that the topping process likely started over here at the Fed. Where's the Fed? Right here? Is this the Fed? No, January. This pullback here was the first weakness in this move up, fairly decent pullback. You got to move up to the CPI, fairly decent pullback. You got to move up, decent pullback. You got to move up. Now you got a bigger pullback. Now you got more things starting to break down here. So are we done yet? Don't know. We haven't broken support, and that is the key. Have we fully broken support to signify a top? Not sure. Or no, the answer is no, not sure. We have not. And until we do, we can see another push higher. So support is the key, and topping takes a while is the lesson there. And the psychology of topping is you got to eventually break down the mindset of the bulls to say this is not a bullish chart anymore, and you're not going to want to be in this aggressively, which I've been saying since about 5,100. You can see a pretty nice bear flag on the hourly here, by the way, just since we came in and I saw it. That's a pretty decent bear flag. So this looks like it could melt down here if they can get some momentum. Where did the diagonal we are tracking start? What price level? We need to zoom out a little bit for that. So right here. So 5,001 was the low. I believe that was Fed. No, that was CPI. This is the CPI low for circle 4. We're trying to build circle 5 up here. Any other questions currently? Remember, if you are new here, you can click in the questions box if you are signed up from YouTube and you haven't been on here before. In the control panel of the webinar, there is a questions box, and you can type your questions in there, and I'm happy to answer them or whatever questions you have about the rooms, about the charts, about anything you want to see. Another thing to look out today, guys, the leaders in the clubhouse are RTY, which is what we expect. I told you 2000 was a very likely target for them, and it still is. You can see the setup they have was for 2013 to 1989, and they are flirting with breaking through this significant support here. This is kind of a cliff for them. They spiked it, bounced, the bulls defended what they could, but they're back to it already, spiked it again, they're sitting right on it. Breaking this will likely lead us to 1989 before we see a bounce. And then we'd look for a bounce back to test that area. We'd look for the 618 to 764 next, one more bounce, and then 1911 overall on the RTY would be our target for one of a bigger C wave down. And then from there, assuming all of that follows through, and you get a bounce back up into that resistance area or so, somewhere in that range. From there, you'd be looking at 1500 or so on the RTY for the next move down to complete. But for that to happen, we need to see all of this follow through first. But my point in going over here, guys, is leader in the clubhouse, RTY, that's a good sign. RTY should be the most bearish because it has the most immediate setup to the downside because it's already topped at the big major top, and now it's creating a secondary high. So that is what you want to see. You're getting, the transports are getting crushed. Today they're down 2%, which is ahead of pace. Everybody else is down about 1%. The semiconductors, Nvidia is just holding them up. Nvidia is so strong, it's ridiculous. But they're still getting beat up a little bit. They are actually relatively strong because of Nvidia and some others here. The financials are getting beat up. That's a good thing. They are leading to the downside. And you're seeing some weakness. I keep telling you, Apple is sick. They're in trouble. They're below monthly averages. Tesla is in trouble. A lot of the big names are starting to roll over. Nvidia is different, but still, if you look at Nvidia, they have a 1-2 and are breaking down here. They need a 4-5, honestly. So I could count Nvidia very easily as wave 3, wave 4, wave 5, right, to 1011 or so. That would be how I would view this move. So Nvidia is not dead by any stretch. I'm not saying Nvidia is falling off the charts yet. They can be, but they're not yet. They can definitely take this back up toward 1000 to complete. That would be the next target higher, 1011, potentially even 1154. But they are starting to move down through some moving averages on the daily chart. Netflix, I think, is still decent. Yeah, they still got plenty of upside potential left. If they break this low here, 600 basically, you could start to worry, but Netflix looks pretty strong still until they break some support. Meta's been a monster too. They're very strong. They're up near their highs. They're fine. Microsoft, they're still fine. They got this support here and then this support here. This support would be upper support. And then if this support breaks, they have a lot of air to fall down pretty quick. Tesla, as I've said, is in trouble. They're in a major meltdown here. They can come down to this major support and bounced a little, but below that, they're going to test down here at the 105 level. Apple or Amazon, I think they were still up by their highs. Yeah, Amazon's fine. Amazon's still climbing. Apple is in trouble. They are below all moving averages on dailies and weeklies, and now are getting below monthly moving averages, which is a big deal. Market managers will dump under the 50 moving average, 50-month moving average. If we go to the monthly on Apple, and Apple was parabolic too. They did the same thing Nvidia did before Nvidia. When everybody says there'll never be another Nvidia, well, there was an Apple, and then there was an Nvidia, and then there'll be somebody else. There's always going to be another somebody. Where am I moving? Oh, I need the 21. So you can see that Apple's below the 21 moving average, which is a big deal on the monthly, which puts its next price target down here at about overall, and it's not like tomorrow, 147. And this is an area that is very important for Apple to hold. So Apple's been in trouble for a little bit. Google, I think, is fine. I haven't looked at them in a minute. Yeah, they're at their all-time highs basically. So they're okay on Google. Well, this is the monthly, so it's a little tougher to see. Let's go back down to the. Yeah, Google's fine. But if you look at Google, this looks very much like a 4-5, where we're looking for them to turn over. This support level eventually will be important for Google, this 130-128. So you're seeing the right sectors lead to the downside. You're seeing the financials, the transports, and the small caps lead to the downside, which is what you want to see. That's a good thing for if you're bearish. It's a bad thing for the market. It's a good thing if you're bearish. So it's not one of those moves where you're getting a flash down and nobody's participating and you're not seeing any of the real sectors that need to participate. You're seeing the real sectors that need to participate actually get involved, which is a good thing. So let's jump back in and see exactly where we're at on ES, then we'll jump into NASDAQ. Look like they broke the low and bounced maybe. They did. Or no, they didn't. They held it. So as of now, they held the low. That's a weekly low, I believe. Is that a weekly low that I have on there? Or is that just my support line? I think that's my support line. Okay. So they held the low and bounced for now. Looks like they're getting a little bit of strength. Still pretty bearish on internals over here. So and until we see some significant buying coming in, I would just call this a bounce. And we'll see how it goes from there. Over on NASDAQ, also bouncing. So NASDAQ, wrong chart. 1 second. NASDAQ did what it had to do. It held the blue box again, but eventually this blue box is going to break. You can see how important it is to the NASDAQ. It tested it here, almost broke it here, tested it here, and tested it again today. They are weakening this area, and a breakdown below this box would be a major hit for the bulls. It would signify at least an intermediate top. But they did hold their B wave low, so you still have the potential for this to be wave 4. And then A, B trying to get C up. And that is incorrect. I apologize. This should be over here. Let me fix that. They did not make a new low here. So it's pretty ugly on NASDAQ in the regard of the start of the C wave, but you would have a 1, 2, and then they're trying to start a new move higher, but I am not sold on this being the case. This is a really ugly move higher. It's more of a leading diagonal if it's going to be anything, but it's really ugly from the point of view of this supposed to be a C wave, and they did not make a new low to reset that C wave. If they would have made a new low here, that would have looked a lot better and held the blue box. So if they would have just come a couple points lower and then gone higher, that would have been much better because you could have moved B over. But you can't do that when they don't make it lower, unless B is going to be a flat, but you're not looking for that kind of move here. So NASDAQ's not in the best spot, in my opinion. They're pretty weak overall. Again, they have that downside squeeze set up with bearish momentum. So NASDAQ can be bullish, but I would be leaning bearish right now. We are still above support. We have been consolidating in this box. They can break out of this consolidation box that we have. They have two pretty key levels. This 18,600 area and this 1850 area have been very key for a while now. And breaking down below this blue box will cause a fairly quick sell-off down to the at least this area here at the 17,627 to start. And then I think even more selling after that. possibly a bounce off that area, just depending on what kind of structure we get. But this looks a whole lot better for the bears than the bulls at this time, even though we are above the blue box and we are in a bull market. Oh, we do have questions. Breath bubble for S&P was at 13. Now it's at 8.9. What causes that? Buying causes that. So when the buyers come in and start to buy stocks, the ratio changes, and now it's a 7-to-1 selling ratio as opposed to the 13-to-1. Did we make it above VWAP or 21 EMA on ES? The market is bouncing right now. I don't know for sure. I'd have to look, but it depends on which 21 you're talking about. There are several. If this is ABC down, how deep does the C wave go? Is it A equals C or extend? Both is the answer. So A equals C is the first target, which we went through. If we go back over to ES, I believe they were close or already at the A equals C target. No, they were not. It's closer to the blue box, sorry. So you have A up to B, and your target is 51.45. And that's about the limit that it can be anyway because of the 764 hitting that area that we talked about before, where waves 1 through 3 or 1 through 4. When you have wave 5 down, it can't go below the 764. But they don't have to stop at the 1.0. They can go to the 1236, the 1618. They can keep going. C waves can extend just like waves 3s. The most common targets are the 1.0 and 1236. Here comes the pump. Not today. I don't think you're getting much pumping today. The internals won't allow it. Maybe at the close. Closes are different. Closes don't matter on the internals as much because that's just a 5 to 15 minute range of the buyers coming in and crushing. But during this next couple hours, I would be very shocked if the bulls rally strongly from here. We have seen absolutely no, without a huge change in internals. Internals are absolutely pegged to bearish. So I would say the pump is unlikely. Gold, GLD. I don't look at gold very often. I look at it enough to know what's going on. Gold has completed 5 up, in my opinion, off of this consolidation. I looked at it the other day when we went through it. I would look for a pullback in gold to this area here, and then I'd look for gold to really be strong to the upside. So gold, in my opinion, is a place that it always has been throughout history, but a place where it's actually set up to look better or look higher, I should say. So gold is a definite bullish setup right now. If you look at gold overall, from the low, this is GLD gold, by the way, not like the actual. So they hit the 1236, which is perfect. We would expect a pullback, I said, to this area here, which is the 764, perfect. Then you'd look for 234, and then you'd look for 250 or so for the next move in gold. And I still only think that that's going to be a wave 1 potentially of a bigger setup to the upside if I zoomed out. But 250 for gold would be my target, and then we'll see what happens. Just based on a very quick overlook of it. Again, I don't chart gold, so that is it. Take that with a grain of salt. A failure point for gold, by the way, if you want a failure point, if gold's not going to make it in a direct impulsive manner, you would want it to stay above 193.67. After 52.15 is the next resistance 52.35. Maybe. Let's go look. 52.13.75, 52.18.50, and then 52.25 would be my next three. Oh, you said after 52.25, didn't you? No, 52.15, yeah. So 52.25, 52.18, and 50, you said 15. So 13, 18, 25, 33, not 33, 32 and 41 would be my next resistances, with 47 being where the bears really need to hold. Hello, Jacob. What's your take on Amazon share price? Is a correction expected in the medium term, or would it continually keep going up? I don't break down Amazon, so I'll look at it here with you while we're on the call. But Amazon is not one I chart in general. I just kind of keep an eye on it. If I'm looking at Amazon, it's at its 20 moving average. It's touch. Oh, this is on the hourly. Let me go to its daily real quick and see what that looks like. Okay. I would need a little bit of time just to kind of look through it. I would expect a pullback. Maybe not today. I'm not saying right this minute a pullback, but they are extended here, and I would need some time to look at Amazon. It's got a little bit of an interesting pattern, and I don't want to give you information that isn't very good. I don't do that. I try to give the best information I can. I would expect at any rate this to be in a wave three of sorts, where whatever this pullback is in count, I don't know, but 1, 2, 3, I'd be looking for a 4 or 5 at some point. But again, without going through the whole chart and understanding exactly where we are, I can't give you really good information on Amazon. Amazon is approaching 189.75. That level I would look for potentially a pullback off of. But again, that's potential, and that's based on a very quick, just kind of flash in the pan reading off of this wave that's continuing right now. It looks like it's in the third wave of a potential overall move to potentially in the 220 range. But again, I need more information on Amazon and more time to do it than I can on this call. So I'm sorry, it's not the best information. I would take everything I just said with an absolute grain of salt. But yeah, I would be looking for some kind of pullback around that 190 area. Long term on Amazon, I would be looking for a topping structure. I don't think they're there yet necessarily. It's possible. Again, I haven't spent a lot of time on Amazon. I don't look at it very often. I would tell you that the information I just gave, as well as a break of 152 would be very concerning on Amazon. You have great support right here, as well as the 50% retrace. That would be concerning for me if they broke 152 on Amazon. Right now, though, they are in a bullish formation. Everything is bullish. They're near their all-time highs, so pressure is definitely up on Amazon. If ES closes below April 4th low, is this the decisive bear case? Not necessarily. So there's a few things about ES. The April 4th low, which is where? Is that this one here? Yeah. No, the blue box is where we need to get to. So that's not even going to be close. It needs to get under 51.15, basically 14. And then even then, when it breaks that box, there's a potential for a bigger diagonal to be playing out. So the potential in that case would be that this is wave 5 of 3 here, wave 5 of 3, and then you have a wave 4 pullback, and then one more push up to about 5,800. And we'd look for this 4,600 to 4,800 zone to hold. And quite frankly, if they break this low decisively, which is at 47.88 on the ES, if they break this low, it's not exactly at that number, but this low here on about the first week of January, there's nothing to catch them before they come down to 4,200. So this low right here is huge support. You've got this peak over here, as well as this pullback here, as well as, if I had to measure it, I'm guessing it's about the 50% retrace. Below that, and I think you're in a free fall to 4,200. Bitcoin I don't mess with. It's it's going to take some time. You would have to go back to the start of Bitcoin to get a good reading on it. I do have a very good friend who charts Bitcoin, and if you were in my room back in, well, let's look at Bitcoin. I can tell you exactly when it was. If you were in my room back here around, nope, it's right around 30,000, right through this consolidation. When they broke out here into the 34,000 zone, I put out a note in my room that said, my buddy who extensively charts Bitcoin and who I trust pretty well with Elliott Wave said we're on the way to 100,000. That was back in October, actually. Back in October, and of course Bitcoin has doubled since then to 70,000, over 70,000, and then they've pulled back. Like I said, I don't chart this, but this does look like the end of a wave 3 of 3, 4 of 3, 5 of 3, and then up to 100K. So that would be my overall view based on him. Again, grain of salt. I don't chart this. That is not financial advice. That is not anything other than what I know from a guy I trust, and I don't like rumors. So take that for what you want. But he was pretty accurate on the breakout, and he's been pretty accurate with Bitcoin for a while. IWM below March lows. What do you say? I say it's below March lows. I would say it has a very good chance at free fall. I said that 2000 was the next target down to 1989, and then a bounce from there, and then continuation. It does look like we're challenging the lows. Before I jump off here, let's look one more time on ES. If they've broken or challenged the lows. So we are on 4-hour charts different. Let's move down to the 5-minute chart. Okay, so they're still just chopping on this low. Yeah, I would expect this low to break today. I'm not saying they're going to close at the lows, but given the overall market in internals, I would expect this to be a move down. And then I think it's very possible you get this kind of move. Maybe not all today, obviously, but over the next couple days, I think you could see a move down today that breaks the low, IPI gives you one of these spike up down deals, and then Friday we'll see what happens. They may try to bull save it because they're coming into support, get a bull save, and then hopefully a breakdown after that. But overall, that's kind of what I'd be looking at. All right, look at that, 45 minutes just like always. But if there are more questions, I will take them. I appreciate anybody who signed in who wasn't normally a member. I encourage you to become part of the group. It's an awesome group with a lot of very talented traders. We make money in there, and these calls are every day where I go over different charts, different things. We don't go through them all. Today I went through everything because there were people from outside the group on here, but about once a week I'll just kind of go through and see where we're at on other charts. It's not just about Elliott Wave and ES and NASDAQ. There's a lot of other value that goes on in here. So I hope you enjoyed it. I hope everybody learned something today. I will be back in the main room, everyone who's part of the group. And if you're not part of the group, you can check out the video tomorrow on YouTube. And I encourage you to at least test it out. It's a 7-day free trial, and you don't have to pay anything for that. So you can just come in and watch for 7 days if you want. All right. Thanks, everybody.